Global Monetary Watch welcomes you to today's in-depth update. Today is July 24, and we're taking a careful look at the latest verified developments surrounding the Iraqi Dinar and the Vietnamese Dong. Rather than focusing on rumors or speculation, today's discussion is built around official announcements, documented policy decisions, and publicly available information from institutions connected to Iraq, Vietnam, and the broader international financial system. Both currencies continue to attract attention, but understanding the difference between confirmed facts and online narratives has never been more important. Throughout this report, we'll examine recent events, explain what they actually mean, and place them into their proper economic context. Over the past several months, conversations surrounding the Iraqi Dinar and Vietnamese Dong have intensified across financial communities. Many online discussions have centered on dramatic claims, yet the most meaningful developments have largely come through official statements, released by government agencies, central banks, and international organizations. These updates may not generate sensational headlines, but they provide valuable insight into how monetary authorities are approaching long-term financial stability. Looking at these verified sources allows for a clearer understanding of the broader picture, while avoiding confusion created by misinformation or unsupported claims circulating across social media platforms. One of the most important subjects to understand is Iraq's current exchange rate framework. The Central Bank of Iraq continues to maintain its official exchange rate at 1,300 Iraqi dinars per US dollar, a figure that also serves as the basis for Iraq's 2026 federal budget. International organizations such as the International Monetary Fund recognize the country's exchange rate system as operating under a conventional peg, with slight accounting differences reflected in published figures. These official rates remain the benchmark used for government planning, banking operations, and monetary policy, making them significantly more relevant than unofficial figures often discussed online. At the same time, Iraq continues to experience differences between the official exchange rate and prices seen in parts of the parallel currency market. Depending on market conditions and local demand, unofficial exchange rates have fluctuated noticeably. While these differences often generate debate, they primarily reflect ongoing structural challenges within Iraq's financial system, rather than changes in official monetary policy. Economists generally view this gap as an indicator of issues such as banking confidence, access to foreign currency, and market liquidity. Understanding this distinction helps explain why official policy and street market activity do not always move together. Another important development occurred when the Central Bank of Iraq responded publicly to a forged document that began circulating through financial networks. The fabricated letter falsely claimed that Iraqi authorities intended to significantly adjust the official exchange rate. Instead of remaining silent, the central bank issued a formal statement rejecting the document entirely, describing it as false information and warning financial institutions, media organizations, and the public against relying on unverified reports. This response demonstrated the bank's willingness to intervene quickly whenever misleading information has the potential to affect confidence in the country's monetary system. The incident highlighted two significant realities. First, it showed that misinformation surrounding Iraq's currency remains an ongoing challenge, particularly as public interest in the dinar continues to grow. Second, it illustrated the central bank's commitment to protecting monetary stability by addressing inaccurate reports before they spread further. Rather than allowing rumors to influence expectations, Iraqi monetary authorities chose to provide an official clarification backed by formal communication. Actions like these are generally viewed as part of a broader effort to strengthen confidence in official institutions while reducing uncertainty created by unofficial sources. This public response was consistent with earlier statements made by Central Bank Governor Ali Mohsen al-Alak during 2026. On multiple occasions, he stated that there were no plans to alter the official exchange rate and emphasized that current monetary policy remains focused on maintaining stability. He also explained that Iraq continues to hold foreign currency reserves at what he described as healthy levels while increasing its gold holdings. In addition, he encouraged citizens not to react emotionally to fluctuations in the currency market or rush toward dollar purchases based solely on rumors or speculation. Although some observers interpreted these comments as disappointing, because they did not announce immediate policy changes, others viewed them differently. Central banks typically prioritize predictability and stability over sudden shifts, especially while implementing broader financial reforms. By reinforcing confidence in reserves, expanding gold holdings, and publicly rejecting false reports, Iraqi monetary officials signaled that their primary objective remains preserving financial stability during an ongoing period of institutional modernization. Such measures may not produce dramatic headlines, but they represent the kind of policy consistency often associated with long-term economic planning. Another major element of Iraq's current strategy extends beyond exchange rates and focuses on rebuilding the country's banking sector. In 2025, the central bank launched a comprehensive banking reform initiative designed to modernize financial institutions, improve governance standards, and strengthen transparency throughout the banking system. By the middle of 2026, officials announced that the principal phase of this program had been completed. This milestone marked an important administrative achievement, as private banks across Iraq submitted documentation outlining how they would comply with the new regulatory framework established under the reform process. Under this program, Iraq's private banks were required to choose one of several clearly defined paths for their future operations. Institutions could continue operating by meeting updated compliance requirements, merge with stronger financial organizations, or voluntarily leave the market if they could not satisfy the new standards. International consulting firms were also brought into the process to assist with restructuring efforts, reflecting Iraq's decision to involve experienced external advisors in modernizing its financial infrastructure. These reforms are intended to strengthen the banking system through improved governance, accountability, and operational efficiency, laying the groundwork for a more resilient financial sector. Before we continue in the next part, we'll examine how these banking reforms connect with Iraq's international financial relationships, recent cooperation with global institutions, developments involving correspondent banking access, the role of oil revenues, and how these factors compare with the current position of Vietnam's currency within the global economy. The next stage of Iraq's banking reform focuses less on paperwork and more on strengthening the daily operations of financial institutions. Authorities have shifted their attention toward improving regulatory compliance, enhancing corporate governance, increasing transparency, and ensuring that banks meet internationally recognized standards. These changes are intended to create a banking environment that is more reliable for businesses, consumers, and international financial partners. While these reforms may appear technical, they play a critical role in establishing a stronger financial system capable of supporting sustainable economic growth over the long term. One of the reasons these reforms are receiving significant attention is because Iraqi officials have openly acknowledged the country's banking challenges. During previous public remarks, the governor of the central bank stated that a substantial portion of citizens' savings remained outside the formal banking system. Many Iraqis have historically preferred keeping cash at home, instead of depositing it into banks due to concerns about trust and confidence. When large amounts of money remain outside regulated financial institutions, it becomes more difficult for policymakers to manage liquidity, strengthen monetary policy, encourage lending, and expand financial inclusion across the economy. Rebuilding confidence in banks therefore becomes more than simply improving customer service. It is a foundational element of broader economic reform. As more funds move through regulated financial institutions, authorities gain better oversight of financial activity while businesses benefit from improved access to banking services. A stronger banking network also supports international trade, investment, and payment system. These objectives explain why Iraq's banking modernization program extends well beyond exchange rates and instead concentrates on building durable institutions capable of supporting the country's long-term economic ambitions. Recent developments have also highlighted growing cooperation between Iraq and international financial partners. During an official visit to Washington, Iraqi officials described a new understanding between the Central Bank of Iraq and the United States Department of the Treasury as an important milestone within the country's financial reform agenda. Although the agreement itself focuses primarily on technical and regulatory cooperation, it reflects ongoing dialogue aimed at strengthening Iraq's banking framework and improving its integration with international financial standards. Such cooperation is generally viewed as part of Iraq's broader effort to modernize its financial sector while reinforcing regulatory oversight. Another noteworthy announcement involved several Iraqi private banks that are expected to regain access to correspondent banking relationships for transactions involving a number of major international currencies. According to statements from Iraq's private banking sector, the initial phase includes access to currencies such as the euro, the Chinese yuan, and the UAE dirham, although it does not yet include direct access to the US dollar. Even so, restoring these relationships represents progress, because correspondent banking services are essential for facilitating international trade, processing payments, and supporting cross-border commercial activity. The importance of correspondent banking is sometimes overlooked outside professional financial circles. These relationships allow banks in different countries to conduct international transactions, settle payments, issue letters of credit, and support businesses involved in importing and exporting goods. Without reliable correspondent banking access, participation in global commerce becomes significantly more difficult. For Iraq, restoring these channels represents another step toward deeper integration with the international financial system, while improving the efficiency and credibility of its banking sector. These developments are particularly notable because several Iraqi banks had previously faced restrictions affecting their participation in international financial channels. The process of restoring access has required regulatory improvements, enhanced compliance measures, and ongoing cooperation with international authorities. Rather than occurring overnight, the process has unfolded gradually as Iraqi institutions work to satisfy evolving international standards related to transparency, financial oversight, and anti-money laundering requirements. The latest announcements suggest continued movement within this broader reform process rather than the completion of it. Beyond banking, Iraq's economic outlook remains closely connected to developments in global energy markets. Oil continues to account for the overwhelming majority of the country's export earnings and government revenue. Because of this dependence, fluctuations in international oil prices directly influence Iraq's fiscal position, budget planning, and capacity to finance public investment. Strong energy markets generally provide additional financial flexibility, while weaker oil prices can place greater pressure on government finances and slow the pace of economic reforms. Recent economic data illustrates this relationship clearly. During 2024, Iraq experienced an economic contraction that was linked in part to extended OPEC production cuts and softer global oil demand. These factors reduced oil-related revenues and highlighted the country's continuing exposure to external energy market conditions. Although Iraq possesses significant natural resources, policymakers have repeatedly emphasized that long-term economic resilience requires reducing dependence on hydrocarbons through broader diversification efforts that expand opportunities across multiple sectors of the economy. Looking ahead, many analysts expect oil prices during the latter part of 2026 to remain relatively stable rather than experiencing dramatic increases. This outlook reinforces the importance of Iraq's ongoing diversification strategy. Government initiatives have increasingly focused on encouraging growth in agriculture, manufacturing, tourism, digital infrastructure, and other non-oil industries. At the same time, international organizations, including the World Bank, continue providing technical assistance for banking reforms and institutional development. Together, these efforts demonstrate a strategy centered on gradual structural improvement, rather than reliance on temporary increases in oil revenue. In the next part, we'll turn our attention to the Vietnamese Dong, examine Vietnam's exchange rate framework, review the country's economic fundamentals, compare the long-term reform paths of both currencies, and conclude with the key verified takeaways from today's analysis. Turning now to Vietnam, the country's currency continues to follow a very different monetary framework from that of Iraq. As of July 2026, the Vietnamese Dong trades at approximately 26,300 to 26,400 Dong per US dollar, remaining one of the lower value currencies on a per-unit basis among major trading economies. However, The numerical value of a currency alone does not reflect the overall strength of an economy. Vietnam operates under a managed floating exchange rate system, meaning the State Bank of Vietnam establishes daily reference rates, while allowing the currency to fluctuate within controlled limits to maintain financial stability and support economic objectives. Current economic forecasts generally suggest only modest movement in the Vietnamese Dong over the coming year. Rather than pointing toward any dramatic or sudden adjustment in the exchange rate, institutional projections indicate relatively small changes that align with Vietnam's long-standing monetary policy. Importantly, there are no verified announcements from Vietnamese authorities or major international financial organizations indicating plans for a rapid revaluation. This distinction is essential because many online discussions often move far beyond what official sources have actually communicated regarding the country's currency policy. Despite the absence of dramatic policy announcements, Vietnam continues to demonstrate several economic strengths that have attracted global attention. The country remains one of Southeast Asia's most active export-driven economies, supported by a strong manufacturing base and consistent foreign direct investment. In recent years, international companies have expanded production within Vietnam as global supply chains evolved following the pandemic. These developments have helped strengthen export performance while increasing foreign currency inflows into the Vietnamese economy, providing continued support for overall economic stability. Economic fundamentals such as manufacturing growth, expanding exports, and sustained foreign investment contribute to long-term confidence in Vietnam's economy. However, these factors generally influence currencies gradually rather than producing immediate shifts in exchange rates. Central banks typically favor predictable adjustments that preserve financial stability, instead of sudden movements capable of disrupting trade or investment. For that reason, discussions surrounding the Vietnamese Dong are best understood through the lens of long-term economic development, rather than expectations of rapid monetary changes. Interestingly, the broader lesson emerging from Vietnam closely resembles the situation currently unfolding in Iraq. In both cases, institutional reform, economic diversification, improved governance, and financial credibility represent the primary drivers of long-term monetary stability. While the two countries operate under different exchange rate systems and face different economic conditions, each has emphasized strengthening financial institutions instead of pursuing abrupt currency adjustments. This shared emphasis highlights the importance of structural reform over short-term speculation when evaluating national monetary policies. Returning to Iraq, official statements continue to reinforce the position that the Iraqi dinar is operating within an established exchange rate framework, supported by the central bank's current monetary strategy. Authorities have repeatedly stated that maintaining exchange rate stability remains a priority while broader banking reforms continue. Likewise, international organizations continue to describe Iraq's currency as functioning within a conventional pegged arrangement. These official positions remain consistent with the broader reform agenda discussed throughout today's report. At the same time, Iraq's financial landscape is undergoing significant institutional transformation. Banking reforms have progressed through important milestones, international consulting firms remain involved in restructuring efforts, and cooperation with global financial partners continues to expand. Recent developments involving correspondent banking relationships, technical engagement with international authorities, and ongoing improvements in regulatory oversight collectively illustrate a financial sector working toward greater modernization. These initiatives may not always generate widespread media attention, but they represent meaningful institutional developments documented through official announcements. Another important factor supporting these reforms is the participation of international organizations and advisory institutions. The World Bank continues providing technical assistance for aspects of Iraq's financial modernization, while cooperation involving the United States Treasury reflects ongoing engagement aimed at strengthening banking oversight and international financial integration. In addition, globally recognized consulting firms have contributed expertise to Iraq's banking restructuring efforts. Together, these partnerships demonstrate that Iraq's financial reforms extend beyond domestic policy and involve collaboration with experienced international organizations. None of these developments eliminate uncertainty. Currency markets remain influenced by numerous factors, including geopolitical events, fluctuations in oil prices, government policy decisions, regional security conditions, and changes within the global economy. Even the most comprehensive economic analysis cannot predict future market outcomes with certainty. Instead, responsible analysis focuses on verified information, institutional actions, and measurable economic developments while recognizing that conditions may continue evolving over time. For viewers following both the Iraqi Dinar and the Vietnamese Dong, today's update highlights the importance of separating documented facts from unsupported speculation. Official policy statements, banking reforms, international cooperation, and broader economic indicators provide a far more reliable basis for understanding these currencies than rumors circulating across social media. While headlines often emphasize dramatic claims, meaningful progress typically occurs through gradual institutional improvements that unfold over extended periods rather than through unexpected announcements. The principal themes emerging from today's analysis remain consistent across both countries. Iraq continues working to strengthen its banking infrastructure, enhance financial transparency, defend exchange rate stability, and rebuild confidence within its financial system. Vietnam continues managing its currency through established monetary policy, while benefiting from sustained export growth and international investment. Although each country follows a distinct economic path, both illustrate how long-term institutional development remains central to maintaining monetary stability. As always, our goal at Global Monetary Watch is to present verified developments with accuracy, balance, and context. We encourage viewers to evaluate official announcements carefully, follow credible institutional sources, and distinguish confirmed information from speculation. By focusing on documented facts rather than sensational claims, it becomes easier to understand the broader financial developments taking place in both Iraq and Vietnam. Thank you for spending your time with Global Monetary Watch on this July 24 update. We appreciate every viewer who values careful, fact-based reporting and thoughtful analysis. If you found today's discussion informative, please subscribe to Global Monetary Watch, press the bell icon, and join us for future updates as we continue covering verified developments involving the Iraqi Dinar, the Vietnamese Dong, and important changes across the global financial landscape.